So again, today we're going to talk about the IRS power grab. And it's been something that's been going on for a long time. I've been warning about it for many, many months about what's going on. First they put these feelers out about what's going to happen. Can we go after everybody's financial records? Can we, go after everybody's cryptocurrency? All these things that are happening. Again, you see it. They play it in the news and put these feelers out and see what, if there's a huge backlash. But even if there is a huge backlash, it doesn't matter. It's coming. Okay, so it's coming that the IRS is going to start getting reports for of all your bank accounts. Right, every one of your bank accounts. It took some time for them to get to your brokerage accounts and things like that. Some years ago, they made all of your financial anybody you did any financial dealings with to send a 1099 third party reporting. So this is what they want. They want third party reporting about everything, and it's the old adage, if you haven't done anything wrong, what are you afraid of? I don't do anything wrong in my house, but I don't want the police being able to walk in and take a look around, make sure I'm okay, right? We're innocent until proven guilty, but not with the IRS, right? I got to prove I'm innocent. They're going to come out, they're going to say, hey, you've been stealing. Show me that you're not stealing. And that's really what this is all about. But actually it is a power grab, but it's also about spending money. Our government is spending so much money. They've run out of ways to come after people. Now, I shouldn't. We all know what the ways are. Increase taxes. That's coming. And there's a Biden proposal about how they're going to go about this. About fiscal year 2022. So let me talk a little bit about that. See, here it is, and here it is. So this is let's go up to the title page, and you'll see this is from the Department of Treasury, and it's the General Explanations of Administration's Fiscal Year 2022 Revenue Proposal. So how are we going to gather revenue? How are we going to get more money? And so one of the sections, and there's a lot here, and I don't have time to get into everything today, but the area that I really want to get into is what they call compliance and improve compliance. And so this is what they're talking about. This is the avenues of which they're going after people. So you'll see here, implement a program integrity allocation adjustment and provide additional funding for tax administration. What does that mean? You know what I mean. Again, you got to look, the government, this is them. This is what do they mean? They mean to fund the IRS, give the IRS more money. That's what they mean. We've already heard, some proposals to quadruple the size of the IRS. Some people, they're doubling it. I think that's probably a given that they're going to double it because they believe they can get a lot of money because people are liars. People are cheaters. The problem with catching every cheater, and again, nobody wants cheaters. We all pay our taxes, and we don't want people to walk without paying them. But the problem with cheaters, when they're going after cheaters so hard, they rein in a bunch of people who aren't cheaters, right? And they make their lives difficult and impossible. I don't know if you've ever had the IRS against you. Of course, that's what I do. I help people who have the IRS against them. It's a very trying experience. And a lot of times this goes on for years and years and years, and people have it's very bad on their health, and they get distraught. And this is what happens. And sometimes it's for no reason at all. Right. And maybe they're not doing something illegal. They're not trying to cheat anybody. But this is what happens when you tighten the screws. Yes, you might catch more people who are cheating, but you're going to catch more people who aren't cheating. And you're going to tell them that they're cheating, and you're going to put them in a position to prove they're not cheating. And this is where the problem arises, in my mind. And the second one here is introduce comprehensive financial account reporting to improve tax compliance. Well, that sounds innocuous enough. We want compliance, right? But what that means is they want, and I've been talking about this on the show since it began, is that they want more. They want your financial records of every year. They want all your bank accounts to give them all of your financial records. So any money that comes in, any money that goes out, they want to be able to sift through it and make sure that there's nothing there that you haven't reported, or by error or not error, but because you're being nefarious, or because you're being or just being lazy, or just innocent, because the tax code is very difficult, and they can catch people doing things that they don't even mean to do. And then, we have to wait. Does the increased amount of scrutiny offset and what they're going to get and the money they're going to collect offset the harm that it does? And my contention is that it does not. It does not. So let's go down. This is down there, page 88. So let me see if I can get there quickly. Okay, so here we are on page 86. Let me get rid of that. And we can go let's go up to the top of 86 and see what this is. This is the implement a program of integrity allocation adjustment and provide additional funding for the tax administration. So, and then they go on, the reason the IRS is down, the budget fell by 20% in constant dollars. So not real dollars. So if they got $100, they're not only getting 80. They're getting more than 100. It's just with inflation, they're not getting what they want. If I have time, I'm going to run a video about how the IRS processed paper ballots. It's an IRS video. It's very eye opening, right? About the work that they used to have to do that they don't do anymore, right? It's not necessary because everything's electronic. Oh, I wanted to bring that number up, but I looked it up today because the video was made in 2003. At that time, and I was surprised to find that about 40% of tax returns in 2003 were done electronically. I thought it was going to be lower, but it was about 40%. But last year it was like 94%, 95% of all tax returns were done electronically. So much of that process that they needed, tons of people, staff. And you'll see, if I don't show the video today, we'll do it tomorrow. But the video is pretty eye-opening about how much work they used to do, and now they don't have to do that work. Well, does that mean that they should have a lower budget because they don't need as many people? They don't need they only need a fraction of the people they used to use. And so that should be a big part of their budget and should be able to save a bunch. To me, that explains the difference, and I think it more than explains the difference. But they don't. They're not telling you that, right? They're blaming They're blaming the lower budget on why the IRS doesn't answer their phones, for instance. And again, my contention is they don't answer their phones because you notice that, and they allocate funds somewhere else. And if they all answered everybody's phones, then you wouldn't see you wouldn't be complaining to your congressman, hey, they're not answering my phones. Let's give them more money. And that's really that's what they're asking for. They need more money. So the administration proposes a multi-year adjustment to the discretionary spending allocation for the IRS enforcement and operation support accounts. The total adjustment would be about $6.7 billion over the budget window. The proposed allocation adjustment for 22 would be fund $417 million in enforcement and compliance initiatives and investments above current levels of activity. The adjustment would cover inflation and the cost to sustain new initiatives and investments through 2031. In addition, the administration proposes to provide the IRS $72.5 billion in mandatory funding over the budget window. The budget window is 10 years. Well, the budget of the IRS, and again, I've said this before, but you probably don't remember what the budget of the IRS is. Is it 100 million? Is it 500 million? The budget for the IRS is close to $14 billion. And that doesn't include the extra allocated money for COVID and other things that they had to do this year, the tax credits and all that. They got additional funding for that. So that doesn't include that. And so now the $7 billion would be just that $7 billion a year would be a 50% increase to the IRS. The proposal would direct the additional resources go toward enforcement against those with the highest incomes rather than Americans with actual income of less than $400,000. Well, that's the proposal. Is that what's going to happen? Is there enough people to spend $7 billion to go after them? I think that's more than enough to go after all of us. So not just those would make that. To leave the people that make less than $400,000. So everybody said, "Whoa, I don't care. We should go after those rich people because because this year we had they released a bunch of tax returns illegally, might I add, that showed billionaires didn't pay enough taxes in their mind." Okay, but nobody said that they weren't following the law. Nobody ever alleged that they were tax cheats. They just showed you what their assets were and then what they paid. And again, I think I said this yesterday. We don't pay taxes on assets yet. That's what they want, though, right? Because then they can get more money. And so without even changing anything, they just changing how they define what's taxable income. Now that they get more money. Right. And that's really what this is about. And so the next section, I just want to talk about this next section also. Introduce a comprehensive financial account reporting to improve tax compliance. Well, that seems reasonable, but let's read what it really means. Business income is subject to limited information reporting. Current information reporting of gross receipts exists for only certain types of revenue. And there is no information reporting on total deductible expenses. Okay, so you don't report. I do report it on my income taxes, right? But they're saying, well, you're lying. You're not telling us. We need to check you to make sure that you're not cheating. We need to look at all of your finances. Okay, so then they give you the reasons for the change, and I talk about this: the tax gap. Here's the other boogeyman. The tax gap. Oh, it was 300 billion. It was 400. Now it's $1 trillion. Is it $1 trillion? Nobody really knows. And they say, oh, the business income exceeds. And so I think they talk also in here about cryptocurrency. The other boogeyman, right? The tax gap and cryptocurrency. The reason why we're having financial problems. No, it isn't. That's got nothing to do with why we're having financial problems. This proposal would create a comprehensive financial account information reporting regime. Very good word. Financial institutions would report data on financial accounts in an information return. The annual return will report gross inflows and outflows with a breakdown for physical cash, transactions with foreign accounts, and transfers to and from another bank account with the same owner. So everything that goes in and out of your bank account, for whatever reason, you're going to have to explain it. This requirement would apply to all businesses and personal accounts from financial institutions, including banks, loans, include bank, loan, and investment accounts, with the exception of accounts below the de minimis cash flow threshold of $600. How many people have an account that doesn't have $600 in it for the whole year? I'm sure there's some, but not very many, right? So that's constructively everybody in America. Similar reporting requirements would also apply to, here it is, crypto asset exchanges and custodians. Now, this is what passed in the infrastructure bill. So a portion of this proposal is already been, they're going to pass it, not all together, they're not going to make this proposal all together. They're going to break it up in little bits and put it all over in all this new legislation that's coming in. And because the legislation gets passed, this all gets put into this. Similar reporting, again, with the cryptocurrency. Separately, reporting requirements would apply in cases in which taxpayers buy crypto assets from one broker and then transfer crypto assets to another broker, and businesses that receive crypto assets in transactions with fair market value of more than $10,000 would have to report such transactions. They already have to report those transactions. That's already law. Okay, so